You guys probably want to know how to pick a good dividend stock. Am I right? Am I right? Yeah, alright. This video is going to teach you how. So I'm going to show you guys 4 things that I look at when picking a dividend stock. It's not going to be looking at everything about the business, like the income statements, the balance sheet. It's going to be 4 specific things. So what I look for in the criteria is the yield, the payout ratio, the 10-year growth for the company's dividend, and the 5-10 ratio. Alright, so first, the yield. What I look for is around 2 to 7%. Too low isn't going to get you anywhere. Like 1 to 2% could be just a waste of your time unless you have a lot of capital. But too high, like 6 to 7% or more, is just sketchy. I mean, anything over 7% yield may be too good to be true. It's not always, but be careful. It could be that the stock dropped a lot and they increased their dividend yield because of that. So for the payout ratio, the dividends per share or the earnings per share, this basically just means how much cash does the company have to pay the dividend. I personally would say anything under 70% is a good payout ratio. It could be more or less and still be good, but this is a ballpark average range. A lower payout means that there's room to grow its dividend and it's very sustainable. And then on the other hand, there's some companies that will pay over 100%, and those are the companies that I would stay away from. So the next thing I look at is the 10-year growth of the company paying their dividends. I like a minimum of 6 to 8 years. If the dividend yield is high, less years might be okay. It might be a little bit more risky, but I would look for at least 6 to 8 years of paying dividend growths. There's some dividend companies like the Dividend King stocks that have been paying dividends for decades, and those ones hold a lot less risk, and I love those ones. So the last thing I look at is the 5-10 ratio. A minimum of 1 is good. Too low or under 1 means that the momentum is decreasing and they are increasing their dividends less and less each year. And if it's too high, well, fuck, that's a good thing. If it's too high, it can't really be too high because they just keep increasing it, and that's a great thing. You guys know what you need to do. Like and subscribe, like the video, drop a thumbs up. Free Discord in the description, free ebook, follow my Instagram at the True Wealth. Peace.